So I'm going to do some intros. Using my phone to do it. I'm not texting or Facebooking, just letting you know. But this is where my notes are. So two of the guests, we have Kyle Samani and Tushar Jain. Please raise your hands. They're with Multicoin Capital, a local investment firm. They handle quite a bit of money, so they'd be very good to ask about all the cryptos you may be interested in investing in. We have Darsh Singh, the co-founder, chief investment officer at Hazur Partners. He's responsible for research, trading, and portfolio management. We have Dhruv Bansal, co-founder of Unchained Capital, also a local company. They allow people to borrow against their crypto holdings without liquidating them. Very cool service. We have Leon Fu, CTO of cryptocurrency.market. He's a senior analyst. We have Trevor Kaverko, a Silicon Valley entrepreneur who's had 2 successful exits from startups he founded. And we have Pablo Gonzalez, founder of the Mexican FinTech Association. So just before we start, we're talking about investment here. Nothing these guys are going to talk about is investment advice. You know the deal. Everything's at your own risk. This is purely opinion. So just please keep that in mind, because this, investment's a sensitive subject. No liability here, just letting you know. All right, so we're going to get started with questions. Who has the first question?
Hey, first, very anti-regulation, anti-government control type investors that want to enter and exit relatively anonymously with our money. Investing in things like, of course, we know there's the garbage mining companies that are just going to steal your money. But in a legitimate, mining operation, entering in those points, is there any... Do you see of any risk other than companies just getting shut down or the company run off with your money? Do you see a big risk? Well, let me rephrase the question. For those type of people that want to make money, we're in Bitcoin because we want to make money. We're not hobbyists. We want to make money. Where do you think the safest route as this starts to get regulated because of how gray it is? Investing in those kind of, where's the safest route for someone who wants to just make money with the growing space, but also doesn't want to be regulated?
One quick question before we start. Not everyone can answer or will answer every question. If you want to answer, great. If you don't, that's okay. Because we got a lot of people and the question may be answered to death. So go ahead.
Well, what we say on our channel is to pay your taxes, even if you are not, even if the government, doesn't know about it. We always encourage people to follow the laws of whatever tax laws that your country or your jurisdiction applies to. There are now, as far as being able to buy things anonymous or semi-anonymously, there are exchanges such as Bittrex or Poloniex, and they do KYC that you have to supply your identity, and that's less anonymous. And then there are instant, what we call instant exchanges, such as Shapeshift and Changelly, who do not take your identity, and you simply send them one coin and they give you another coin. And so those are right now the 2 ways crypto investors are entering and exiting positions, that I would say. And there's also over-the-counter places such as Cumberland Mining, who do KYC. They have to know who you are, but it's KYC light. I would say that they do less KYC than an exchange such as Coinbase or even Poloniex or Bittrex. So those are the common ways investors enter and exit positions that I know of.
Just a really quick thing to add to that is people here may or may not be aware of privacy coins, things like Monero or Zcash, where you can have mathematically proven anonymity. And if what you're really looking for is to go off the grid, like, they provide that, and that's their primary value proposition. So you might consider that as an option. But completely agree with Leon, pay your taxes, guys. You do not want to get stuck with an IRS bill. You're going to, crypto is doing really well. I'd like to say I want to pay more taxes because it means that we made more money. Anyone else?
Okay, very good. Next question.
So somewhat along those same lines, many of you have been involved in ICOs or in startups, and there is Reg D investment on some side of that. Is there a lighter form of that, like Reg A plus, and do you have any experience with those lighter forms of regulation?
Yeah, I'll take a crack at this one. So, there's kind of two broad schools of thoughts with ICOs. One is they are securities, no matter what the token is or does. The other is, they're not securities. It's totally unclear, utility tokens, where they're going to end up falling. So, if you think it's not a security, and you have law firms, can with a straight face say, no, we think it's not a security, then all that stuff goes out the window, and you're selling prepaid API keys, basically, for your service. Our view is that with current understanding of the Howey test, that a lot of these things, could be considered not securities. We'll see if the SEC cracks down, and if they do, then there's going to be some court cases, and it's going to go all the way to the Supreme Court. Supreme Court is the one who issued the Howey test. So if you're going to change the Howey test, then it's going to be the Supreme Court. The SEC can't change that. They'll try to, but it'll be challenged. If I can't recall any high-profile sale that volunteered to be a security other than maybe Filecoin. And I think they did it under Reg D. You might know, Darsh. Yeah. It's pretty infrequent. I think you'll see more people doing it, but it's not super frequent. And the quote unquote easy answer is to try and frame your sale as a utility token. Get some lawyers on board who know what they're saying and see if they agree. Cooley and what's the other big one? Perkins Coie. They have people on staff who know how to think through these issues.
Just for ICOs, different from securities, you're not becoming an owner of the company. In a security, when you buy a security, when you buy stocks, you are buying a part of a company. You are buying what they send out to the market as an IPO, and you're becoming the owner. For ICO, just to be clear, for people that think that if you buy an ICO, you're becoming a stockholder or you're becoming part of the company, you're not. You're just becoming part of something that could probably have an income in the future or probably that could be used in the future. Just know that ICOs, you're not actually becoming an owner of that company. You're not becoming an owner of the team or the thing that's backing this ICO. Just so also, if this company fails, if it's a security, you can go and there's laws already that you can do something about it. In ICOs right now, it's going to be very hard to do it. Just know that although it's a great space, it's probably some of the financing couldn't have gotten there another way. You're running a big risk, and just I like the model of ICOs. I think it's going to continue growing. Just know that you're actually running a big risk, and you won't be able to do something if it will be very hard. It will be harder to do something if it fails, harder than if you were actually buying a security that went broke to under loss.
I'll add one more thing on the Reg A, Reg D discussions. As people are considering trying to fit within the existing system, with technology that's designed for a new system, right? So it's difficult, but there are specific challenges around Reg A, Reg D around the transfer of those interests. So part of the idea of tokenization of these interests is a secondary exchange, right? Reg A, Reg D offerings, you have to have certain disclosures, certain holding periods that current technology, current trading platforms don't account for. And that puts a lot of the exchanges at risk, right? That's why they don't have the security tokens. And so I think, are we going to see more Reg A, Reg D offerings? Yes, but the financial infrastructure has to get there first. And people who choose to participate in these things that are regulated, have to understand their obligations. It's not just a free-for-all. That now we're tokenizing equity interest, or we're tokenizing debt, or royalty interest, or whatever it is, future cash flows. There are additional rules that if you're choosing to participate in the system, you have to take into consideration. And so before we can get to the massive proliferation of Reg A, Reg D offerings, or whatever other types of offerings, we have to make sure that the financial infrastructure layers are built first.
Anyone else right now? Okay.
What do you guys consider the top three publicly traded companies in the blockchain space?
Do you mean equities like
Yeah, equities, yeah.
Are there any?
I'm asking, yeah.
It was NVIDIA, AMD, Overstock are the ones that are making noise.
There is an emerging class of public blockchain companies, mostly in Canada. That's where I'm from. And the Canadian go public market is a lot easier. The barriers are a lot lower, and the regulation is a lot lighter. So companies like Hive trades on the CSE exchange, is public. They are crushing it since they've gone public because they represent the only way that a traditional retail investor can get exposure to crypto who is unsophisticated and doesn't know how to use the technology. This is a company that is a subsidiary of Genesis Mining, and the subsidiary itself is already worth almost $1 billion on the Canadian exchanges. So it's making the ICO markets blush, the actual real IPO markets right now. So you can expect to see a lot more companies doing reverse takeovers and other kind of quasi go public events because the market's exceptionally hot right now.
And as for Bitcoin and blockchain startups, the biggest one would be Coinbase, which is the first one that is valued over $1 billion in the space. So that would be one of the biggest companies that we have right now.
Before we go on to another question, I want to do a quick poll. How many people consider themselves to be beginner investors? Either you haven't started or you're just starting in the blockchain space. Okay. So a good question before we move on is, how do people get started? They've never touched crypto before. They're real beginners. Should they be looking at ICOs? Should they stay away? What do you guys recommend to get started?
I think your last answer was perfectly good. Coinbase is a great place to start if you're an American. Someone said it to me earlier yesterday. It's like the AOL of the industry. They even have the same colors. Totally great place to start.
Bitcoin.
Yeah, Bitcoin and Ether. In terms of like figuring out like how crypto works and wallets and private keys and all this stuff, start with like $20, set up a Coinbase account, figure out how to like get your money off Coinbase, store it on your own system, buy a hardware wallet, play with the 24 words. This is all going to sound like mumbo jumbo, but like just go through the steps. Then figure out how to get onto Poloniex, which doesn't take US dollars. They only take Bitcoin. And then figure out how to buy like Factom or like Monero or something, and like download those systems. And like it should be 10 to 20 hours, and you're going to kind of bang your head against the wall, and you're going to be like, this doesn't make any sense. Do this with like $20 because just assume you will lose it. And like go through that, and at some point you'll figure out like, aha, okay, here's how addresses are generated, and like that will start to click. And then you'll feel a lot more comfortable actually moving money around. That's definitely like my first thing. And then like as you do that, you'll Google a lot of stuff on like, how do I do this? How do I do that? And then you'll start to find educational resources. I know places like cryptocurrency.market is pretty good for stuff like this to get started. There's a lot of other resources online. But I would start with $20 and like just try and turn $20 into 10 different cryptos and like see if you can figure out how to do that. Then that will give you like base foundation.
Just to add something to that, something that I think everyone needs to take really seriously if you're going to invest in this market is security. So Kyle mentioned, go and buy on Coinbase, get your assets into some sort of hardware wallet or some other type of solution like that, something like a Ledger or a Trezor, go and trade on Poloniex, et cetera. And the key thing out of there that I would want everyone who's a beginner investor to realize is do not leave your money sitting on an exchange. That is the riskiest place for you to leave your money. To a lot of the crypto insiders, like this is old news, like everyone's heard this before, you understand it. But an example is I was talking to David, who has been in crypto since like 2012, and he's like, every single exchange that he invested into Bitcoin back in 2012 is gone now. Every single one, because when they have that pooled capital, they are great targets for attackers. So you do not want to leave your capital on an exchange. You definitely want to get some sort of storage solution that's off exchange. And make sure you take that really seriously, because you are self-custodying your money, right? There is no undo button. There's no like call the fraud prevention hotline at Bank of America and they undo your transaction.
Would you consider Coinbase an exchange?
So Coinbase is the one kind of gray area thing, because they have not actually been hacked yet, right? And they've been around for a while. They've been a bin target. They have an insurance policy, which is unique. No one else really has an insurance policy. And some of the security practices that they have around, not their wallet product, but their vault product with the multi-sig, is actually quite sophisticated and can meet the needs of most people. So like, for example, my parents invested in crypto, mostly because I convinced them to do it, and like they hold their assets in Coinbase. So like there's a level of security that you need to do if you're holding, you know, like a tremendous amount of money. Like everyone here who runs a fund like does different things for security, and it's not leave your money on Coinbase. But if you're investing something like $10,000, Coinbase is an appropriate solution.
Yeah, I would just like to echo what Tushar said. Like, I bought my first Bitcoin back in late 2012 or early 2013, and you know, I've bought Bitcoins for over, I would say, half a dozen or a dozen exchanges, and they're all gone. Like, not a single one of them. I think the last exchange that I had traded anything before during that era, 2012, 2013, was BTCE, and they just got hacked by the government, I think. So you know, when you know, all of these exchanges are going to get hacked, they're either going to get hacked by you know, a hacker that breaks through, you know, technically, you know, they break through some firewall and or an insider, or you know, they got hacked by the government because they didn't comply with some law, and the government came in and shut them down. So. That's why I will echo that. Don't keep your money on exchanges. Use a hardware wallet. I think that's the best practice that we have today. I personally don't even keep my money on Coinbase. I don't even trust them. But I will agree that if you're going to do it, that's probably one of the better places to do it. But don't do it if you don't have to.
Okay, let's move on. Question.
Is it safe to work for a startup company that going ICO very soon? Like, for example, you guys have investment or maybe have done ICO before. Is it, if somebody is working for you, what type of information that you need to give that person so he doesn't have to worry about whether the product is a scam or not scam? As you know, there is a lot of ICO failing in the market, so you don't know which one is legit and which one is not.
So is the question like, how do you know if is it safe to work for an ICO?
Is it safe?
I will pass that off to someone else because I don't know.
Yeah.
Well, you started to say if it's secure working in a startup. No, it's very high risk. for starters, working in a startup, besides working in an ICO, it's a big risk. You're in a company that's just starting, trying to take off, proving a product, proving that something can be launched to the market. Most startups don't live over a year. So no, for starters, working in a startup is high risk. Working in an ICO, I would put it in very, very high risk. And you can see, even if you get a lot of funding, like you can see what happened like 2 weeks ago with Tesos. Like if you read their statement, they even say that although they got over 200 million, I think like $200 million, they can't. They haven't been able to hire the correct people for the startup, and they haven't been able to launch. So if working for a startup is high risk, working for an ICO is super high risk, and now they're having problems with their foundation, and the foundation is the one that runs the money, so they cannot have access to the funds. So although they raised all this amount of money and they become one of the biggest ICOs, they're having problems running the actual company and putting it into production. So yeah, it's super high risk.
Also, I know your question is sort of more immediate about working for these ICOs, but generally when you think about the future of work, where does blockchain take us in terms of decentralized organizations, people working, gig jobs based on bounties run by blockchains? And so generally speaking, and more than 50% of the workers in America today are, doing consultative or part-time work in general. And so just thinking about where society is going, this is going to be the beginning of discomfort with that transition from being a corporate job person to more of the gig economy and different things we've heard. And so blockchain plays a unique role in enabling some of that work. And so, my number one question is it safe to work for the ICO? I'll say, well, do they have the money and can they put it in a smart contract that can pay you for the work you're going to do? If so, great. You're set. Don't worry about it, right? But we're just sort of going through the transition of getting comfortable with what that looks like in the future. And so that's just sort of one way to sort of frame around that transition.
Liability-wise, the team, they are liable if the ICO is a fake, they run out of the money or anything. And that's what the regulation, one of the sessions, they're talking about the regulation, that those people who are working for the ICO, they can get in trouble.
Just to add a little bit of positivity, I will say that yes, if you feel you are unable to personally evaluate whether the product you are working on is a sham or not, you shouldn't be in a startup. You should work at a large company where you're safe. Conversely, there's a lot of really good reasons to work at startups, especially in this space. Part of it is risk-reward. To underscore your point, Jose, there's a lot of risk in being in any startup. That has been true and is always the nature of startups throughout time. And there's a lot of reward to it. But I will say that one of the things I find very positive in my own work is that even if my company fails, which it's not going to, it's going to be a tremendous success and all that, but even if it were to fail, I'm learning every single day a lot faster than I would be in almost any other kind of work that I could do. And I can say that about every member of my team. We are all becoming more valuable because of the learnings that we're undergoing, partly because that is where the world is turning, to your point, Darsh. So yes, if you are afraid of risk or you feel like you cannot evaluate the technological claims or the business claims of the people that you're contemplating working for, don't do it. But if you feel like you understand why their product makes sense, you like the team, and that you're going to be learning, then rest assured that you're building a really good foundation for the next couple of decades, regardless if you're in tech or sales or marketing or anything. There's a reason we are all here. It's because this is going to be big.
Okay, very good. Next question.
So question on ICOs. So before ICOs were running in a way that first come, first serve. You just have to have a Ethereum address or just send the money and it's done, kind of anonymous. But these days, those whitelists are coming. They are asking your documents for KYC. Once it's approved, then you participate in ICOs. So my question is, how are they going to deal with those documents? And as an investor, how careful you should be about regulation or getting those documents stolen, identity theft and all?
Your social security number is guaranteed in a spreadsheet, like at a government office in whatever town you live in. I'll just point out that the centralized requirements for security and information that we are all asked to gather are no different than what would have been asked to gather by any other government or lending or financial entity you've ever worked with in the past. I wish I could say this with more conviction, but almost certainly our companies are doing a better job of that security, because most companies that are thinking about this stuff in our space are very security conscious. That's just untrue of a casual loan officer in a mortgage in a town or a local stockbroker helping you make picks. I feel like we are more secure. I wish I could say that. I knew that. It's just a difference in attitude.
Yeah, I mean, I'd say also in general with ICOs, I would avoid all ICOs that don't have a reputable law firm behind them. That's probably just the easiest signal. Some ICOs just put up an Ethereum address and say, send Ether here. There's some that have actually been reputable that have done that. It seems to be getting to be best practice rather quickly. to like have a law firm and like use something like Civic or something else for KYC and identity. I think you're still, I mean, if you're comfortable with the risks, you could probably still do one that doesn't have any KYC, but just be sure there's like a real law firm there before you do it. And yeah, I wouldn't send my like any identifying information if like there's not a real law firm behind the project.
Okay.
Thank you, sir. Hello. So we know that the Bitcoin scalability debate has been going on for a long time, right? And there are clearly two camps out there, the SegBit2 camp and the Bitcoin Core camp. Now, more generally, my question to you is, if I can get a vote on, how many of you fall for, or vote for each of those two camps, if that's possible for you to say that here. But more generally, my question is, going forward, what are some of the really good scalability solutions for the Bitcoin platform and for other altcoins that fall in the same league?
So guys, let's real quick. This is 1x. You guys raise your hands versus 1x. 1x, 2x.
Yeah, this is a scalability question, which is kind of outside the scope, but we'll just get a quick panel.
1x, yeah. 2x. I'm.
So, I mean, I would really say about 1x versus 2x. For me, it's I don't care. I just want them to not destroy Bitcoin. All right, and I feel like that's the majority of us. Like, you know what? Put the politics aside for a moment. We have a really cool thing going here. Like, it's working. How about we don't risk everything for a political debate? But that's just not how this ends up working out, right?
I think the broader purpose of the debate really comes down to actual technical and philosophical ideas of, is Bitcoin a store of value? Is it gold? If it's gold, then Bitcoin as it is just fine. You don't need to do thousands of transactions per second. You just need to do a few and sit on it. But if Bitcoin is a payment network and it's going to replace cash, then you actually do need to scale up the transactions. And I like to think Bitcoin should be a payment network. That's kind of what Satoshi envisioned, a peer-to-peer payment network, and it just isn't right now. MasterCard does 2,000 transactions per second, PayPal does 200, Bitcoin does 7. It's just not even in the ballpark right now. So I'm of the opinion that we should be looking at supporting the fiefdoms within Bitcoin that are thinking about improving it, scaling it. I think forks play a big component in this. It's kind of a free market way to have both parties be right and then just see which one wins out. But yeah, I would lay my stake in the ground that Bitcoin should scale and we should support the smart people who are trying to do that. Digital gold just isn't as interesting to me.
That's a better question than 1x versus 2x.
Yeah. So one of the themes on my Twitter is that Bitcoin, in my opinion, really lacks the governance structures to scale. And when I say scale, I don't mean transactions per second. I mean to scale the community. And so because of that, every time there's contention within the Bitcoin community, there's going to be a fork. And we just had one, it was Bitcoin Cash. We just had another one called Bitcoin Gold. We're going to have another one called Bitcoin 2X. And there's going to be dozens more. Like, that's my thesis, is that we're going to have a bunch of these. I've created the term baby Bitcoins. And all with the community fracturing into different factions and creating their own fork. And I don't think it's clear which one of those are going to win at this point. I think that will play out in the market.
Okay, let's move back to investment questions, because that's the focus here.
So my question, I would like to take from you guys, or your input on how the ICOs that have come out previously, like the Veritasiums and the Populuses that have done very well when they hit the market, and now we have ones that are quality, reputable ICOs that when they're hitting the market, they're just losing value immediately. What's your take on that?
I mean, I think the the ICO FOMO is dying down. There are a lot of projects that raised more money than they should have. and we're seeing that like the market. I think you're going to continue to see lots of projects raise under 10 million. I think the number of projects that are raising in the 40 to 60 range is going to decrease quite significantly, as people are just kind of figuring out, wait a second, like this team shouldn't raise $60 million. So I think the market's just getting a little smarter. I think that's what it is. I think also you're going to see a barbell. So like venture capital firms are starting to make bets in the space openly. Guys like us are starting to put larger amounts of money to work behind things pre-ICO. And so I think you'll see a barbell where you're going to see things like Orchid, things like Basecoin. They're going to raise just stupid amounts of money, like all in the 200 million plus range. So I think you're going to see a barbell, and then you're going to see like a lot of stuff under 10. I think the stuff that raises 20, 30, 40, 50, and that pops is not going to sustain. And it might already be dead.
You mentioned they're doing great. No, they're not doing great. They're doing great as a speculation. They're doing great if you just buy and sell it, and if your use case for what buying ICO is speculating. There will be doing great when you see an ICO that is doing hundreds of thousands of transactions for what they were meant to bring in that money, not speculation. For me, for an ICO to do great is that they're actual for what they wrote their white paper, they're doing thousands or millions of transactions for what they were meant to be. They're only doing great now if you're a speculator, if you're just buying and selling and trying to make a profit out of that.
Are there any such ICOs out today
That
meet your criteria?
For that I would say they're doing great. No. In a year, in 2 years, probably there are some that are just starting to make transactions, that are just starting to do what their white paper, what they set out in their white paper. But right now, there isn't any ICO that can tell you I'm making millions of transactions for my customers. No.
So I think that this is a question that highlights how liquidity changes investing in this space entirely. Because we've never before had a market which was such early stage technology investing, but was also liquid, right? And now because it's liquid and you have mark-to-market pricing, you can see what the price is every day. Everyone starts thinking, oh, how's it doing today? Or how's it been doing the last week? But really, these are early stage investments that like venture capitalists are used to making, and they've been making these for a long time, and they were illiquid, so you could hold and have conviction, and like you're not seeing the price change for 2 years until they raise their next round. So I completely agree with Jose here. Like a successful ICO is a company that actually builds the product that they were meant to build. That's going to take some time. Like these are not trivial technology problems. They are actually difficult work. You have to hire engineers, you have to hire designers, you have to actually produce what you were raising the money to build. And the fact that everything is freely floating is actually detracting away from looking at the right success metrics, I think, right? So I would say if you invest in an ICO, invest in an ICO because you would be willing to go and put that away for 2 years and come back to it in 2 years. If you're investing in an ICO because you think it's going to do really well right after it goes public and you basically want to absorb that pop, like you are going to be left on some of these holding the bag because you invested and the market demand wasn't necessarily there. That doesn't mean it's a bad thing though, because if you actually did invest based on a 2-year time horizon or when the product is actually going to be shipping, then even if it goes and drops after the ICO, that's fine. You weren't intending on selling anyway.
Let me just add to that. I think in our boot camp that we run, that we emphasize to really pay attention to the valuation of the not just an ICO, any coin, to make sure you're not overpaying. It's not just merely the amount of money they raised, it's also the percentage of the tokens that you got from that raise. So what I suggest is that you pay attention to how much you're investing. Like don't invest don't give a white paper $100 million valuation. In other words, that's probably you're overpaying. So just be aware of what stage they are in a project is in their development, and what is the price you're paying, and how does that compare to other projects in the market. Basically, what I'm saying is comparison shopping, right? Like if you have a house, if this neighborhood these houses in this neighborhood trade at $100 a square foot, it's probably not a good idea to buy one that's charging $200 a square foot for the same house. So I would that would be just my 2 cents.
I care about the right now. I'm in the middle of an ICO, so I am looking at today's market sentiment, which is very negative right now. There's a lot of fatigue in the market. A lot of saturation has taken place. Everyone has been lowering their caps if you're looking at these deals every day. And I think you just got to look at it in two ways. It's a function of how much exogenous capital is coming into the space. That's one function. And the second one is how is that getting allocated throughout the ecosystem? And I agree with Kyle that it is bifurcating between small scale projects, and big projects are going to be the ones sucking up a majority of the capital, kind of in a scale-free network kind of way. But for today, you got to think, what valuation is your project? Just like Leon's saying, what are your token mechanics? As an investor, you should be very concerned with what's the bonus structure, how many tokens are getting issued to the public, how many are getting held at head office from the company, what's the market cap at the ICO, what is the circulating market cap, which is actually different than the total market cap. It's how many tokens are circulating in the market, even though there might be millions and even billions of unvested tokens that the company still controls. So now that
just to let you know, we get about 3 minutes left. I just want to make a general statement. In the audience, we have people that are very sophisticated, people that are newbies. Go with your level of sophistication. Don't try to overreach. This is, I think, good advice that any of you would give. If you have sophisticated questions, obviously these are the guys to talk to. But if you're not comfortable, if you're just barely comfortable with Bitcoin, go with Bitcoin. If you think, all right, I'm going to play in the ICO game, you're playing at a much higher level of sophistication. You need to understand that. So just want to give everyone a sense that it's okay. Whatever level you're at is fine. If you have 0.1 Bitcoin and that's all you have, wonderful. If you have 500 Bitcoin and you're doing ICOs and all that, wonderful. But don't be ashamed. And there's a lot to know in this market and a lot to consider. And your sophistication is okay. So I just want to make mention of that. A couple more questions. I just got to...
Just to answer that real quick. So the total supply of Bitcoin is 21 million, but the circulating supply is more like 16 million. So the difference is what's basically held back at head office. So it's stuff that hasn't been mined yet, or in ICOs, it's tokens that are vested programmatically, and they'll get released over time. So it's very important to know when these supply dumps happen on your token, and because what happens when you have more supply, the price goes down.
Can we get like one or two alts that y'all all firmly believe in or hold a large position in currently? Not financial advice, but just something you believe in for the future. We've been talking about ICOs, but just like one or two alts from everyone that they believe in.
I like Litecoin. I know Charlie Lee. I'm very impressed. I see Litecoin as the petri dish of Bitcoin, so they're more willing to try out new technological improvements, kind of like the minor leagues, and then if it goes well in Litecoin, Bitcoin adopts it. So I see Litecoin as the silver to Bitcoin's gold.
Well, I don't want to give investment advice, so I will say that the coins I believe that will survive the next bear market that we all know is coming, but we don't know when. Bitcoin, Ethereum, Litecoin. I think Monero will make it. I think Dash probably will make it. But outside of that, we invested through the 2014 bear market when Bitcoin pulled back over 80% and most of the alts were wiped out. If you look at CoinMarketCap at the end of 2013 and today, the only coins left, I think, are Bitcoin, Ripple. There was no Ethereum yet. There was Litecoin. There was Dogecoin. That's still on the first page, right? But that's about it. I don't think anything else made it through the 20. Now, if they're still trading there on the second or third page or something like that, they're not really worth much. And the next cycle will my view is it will wipe out most of all the top coins. Probably won't make it like they didn't in 2014.
personally, I like Ether, and Ether is the only one that has surpassed Bitcoin as number of transactions. Bitcoin has gone up to 300,000 transactions in a day. Ethereum has gone up to over 500,000 transactions in a day. That's the only altcoin, the only other technology token that is doing that. It's the only one. And I will tell anybody here, never make an investment because someone else told you it's a good investment. Never, if my friend or someone told me it's a great investment, never make an investment because of that advice. For example, in ICOs, it's an emerging market. I've told it it's super high risk, but what you can do is, first of all, get documented and see what you're investing in. They at least have a white paper and get into their community. Most of them have Slack channels, Telegram channels, even WhatsApp. Go into that community and see what they're doing, who they are. Ask all the questions you want, because at the end of the day, you're giving them their money. So just get as much informed as you can in any altcoin, LCO, Bitcoin, whatever. Get into it. Come to this type of events and speak with the people that are inside there.
Okay, guys, we got a wrap. Thanks so much for your wisdom. Great session.